Hey, if you're looking to grow and scale and need to identify the right markets to invest, you are in luck because today we sit down with Nitzan Mosery and we get into his philosophy and his approach to find great markets and submarkets for his deals. So if you want to learn how to find the right market, but then also the right questions to ask to build your business plan, check out today's conversation right here on Multifamily Insights. Now, Nitzan Mosery is a serial entrepreneur, a coach, investor, and host of the Traveling Investor Radio Show. Now, with knowledge and wisdom he's gained, he started and successfully run multiple businesses in different industries, including clothing, renovation and restoration, jewelry, hospitality, and of course, multifamily real estate investing. Let's welcome to the show, Nitzan Mosery.
Hey, thanks, John. Appreciate being here. Thank
Yeah.
you so much.
Absolutely. Great to have you on. I had the pleasure of listening to you speak out in St. Louis. Was that earlier this year? I mean, my time is
Yeah.
compressed so crazy. So I think it was earlier this year. I'm like, was that last year, this year? It was this year. But for our listeners who are not familiar with you and your story, why don't you take a couple of minutes and fill in some of those gaps?
Yeah, sure. Absolutely. Born and raised in New York City, I'm first generation American. My parents always, instilled in my head that there's two types of people in this world, those that pay rent and those that collect. And son, you always want to be on the collecting side. So that was, I grew up with that mentality and with that idea in the back of my head. At the age of 25, I went to school. I went to study at university, at Pace University in downtown Manhattan. I never graduated. I just didn't know what I wanted to do with my life. And then at the age of 25, my father passed away. And then I went traveling, kind of lost sight of what was important in life. And I had no responsibility. So I went traveling. I traveled the world for about 6, 7 years, all over the place. And then settled in Israel and opened up the first raw vegan restaurant in Israel. Before leaving New York, I was with my brothers. We had a renovation and restoration company. We owned some real estate in Manhattan as well, and uh, and then I went and I settled in Israel for many many years. And in 2009, when the world blew up, I kind of moved back to Florida, thinking that we would live here for about a year, buy a house, fix it up, and make some money and then continue on our merry way. And 15 years later or 16 years later, here I am. And I started flipping houses like a lot of people do. You know, it was the lowest hanging fruit. So I was flipping houses, wholesaling, doing double closes, all that stuff. And what I realized real quick was that that ride of all these distressed houses was going away, and a lot more people were coming to the market wanting to flip and just driving prices really high. So I said, all right, what can I do? I'm very lazy. I don't like to work a lot. So I said, what can I do that could bring me passive income, that could, generate income where I don't have to be at it or be at a desk every single day and, work for the man or, do that kind of stuff. And I heard somebody talking about rentals, and I said, wow, that's a great thing. Cause then it kind of remembered what my parents were talking when I was younger about, renting and then collecting rent and all that kind of stuff. But all I knew was single family. And, like so many of us, all I knew was I've got money in my pocket. I'll go buy a house and I'll put a renter in it. But then I had no more money to buy more houses. So what then? And then I heard somebody talking about other people's money and the syndication model, and you can raise capital from other people and so forth. And, growing up in New York City, I was always thinking, like, how do these people have so much money to go out and buy all this big properties? And I realized that it was based on raising capital, going out there and investing and bringing in more. So I started learning. I bought a duplex on the south side of Chicago. That was a really bad project. And then I bought a 4 unit property on the wrong side of the railroad tracks in West Palm. And I learned the hard way how to go out and what not to do, so to speak, right? And then from there, I partnered with other people and was able to go out and do bigger and nicer projects and more and in different markets. And that kind of just snowballed into where I am today. And, I started buying 140 units and 220 and, and smaller units as well, 44, 50, 70, all 130 units in different markets. And I really learned what what it means, or how to scale your business and how to build teams around you. Because as I said, I'm not a college graduate. I'm not the sharpest tool in the toolbox. So I realized quickly that I needed to surround myself with people who were a lot smarter than I am. And thank God I did that very well. And here I am today.
Nitzan, I love a few things you mentioned on your journey. One, the fact that spent a lot of time trying to figure out what in the heck you really wanted to do. You talked about being lazy. And, I know we always praise the grind culture, right? Just working hard, hustling, sticking to it. But there is something to stepping back and figuring out a smarter way of getting production. And that's what
Absolutely.
you talked about, right? You mentioned, starting off, you went to college for a couple of years, that didn't pan out, travel the world. You worked with your brother doing a restoration renovation business. You slowly started to get into some flipping, some wholesaling, some single family rentals, and you kept running out of money. And this is a story that many of our listeners are familiar with. It's certainly what happened to me. I wasn't flipping and wholesaling. I was doing smaller multifamily, 2, 3 unit properties. But every time I bought a property, I was back to broke. And I had to wait to save enough
Exactly.
money to climb this mountain once again. And eventually I got to the point where I realized there's got to be a better way. I mean, this feels daunting. And like the question you asked, how do people have all this money to do this? Like, there's got to be a different
Exactly.
path. And for you, you talked about opening up your eyes and being open to OPM, other people's money, syndication, and just being more creative on the deal structures. I want to come back here because you talked about from that moment, you started to invest in other markets. You mentioned a duplex on the south side of Chicago, a 4 unit on the wrong side of the tracks in West Palm. What How did you do those deals and what was the lesson learned from the execution of those deals?
Yeah. So those two particular deals I did with my own capital. I had a partner. I did that with my own money, and I found again that once I bought these assets, I had no more money. So my money was tied up in one property, and what I learned was do your due diligence on the market, on the neighborhood, right? Because yes, you're buying a property, but what you're also buying is the area. Are your neighbors? Are the is there gentrification happening? Is it not? Right? You're buying the market and the neighborhood with the property. So do your due diligence on that. Make sure that the people that you hire to manage your asset are qualified to manage the asset, and do your homework on your tenants. Make sure you do your tenant background checks. You check their applications. You do all that because on the fourplex that I bought, I had some very unsavory tenants.
Yeah, I mean, those are three crushers right there, right? Really hard to overcome, a bad market, a bad team, and bad tenants. And if you have that, I mean, yeah, it's going to be a challenge. The market, we launched this podcast initially. It was called Target Market Insights, and it got into exactly what you were getting on, right? How do you identify the right, not just macro markets and cities, but the sub markets, the path of progress? Where is there going to be opportunity? And there's lots of great data to cover. And it's something we actually put together a guide. It's 35 hacks to find the best markets and sub markets. If you want that, we'll put a link to that in the show notes. And we got a lot of great insights from different guests like yourself who shared what the tips were that they utilize to find those areas. The team, though, that's always tricky, man. And no matter who we talk to, there's certainly, questions you can ask and things like that. But when you're out of market, I'm assuming you weren't in Chicago at this time, right? So you're out of market, you're hiring people. You said to make sure that they're qualified. If you could go back, what would you do to ensure that those individuals were qualified, whether it be a screening process, questions? How would you revise your process there?
Absolutely, that's a great question. I would definitely do a deeper screening process, right? Check background, criminal, um, check employment, all of that before I even, while during my due diligence phase, right? I didn't do that on the fourplex. I figured, oh, it's occupied. It's got four tenants in there. The owner said that they're paying rent. I'm taking his word for it, right? So there was a lot of lessons learned over there that, from New York, we have a saying, right? Trust but verify. I'll trust what you say, but you know what? I got to verify. And especially when you're raising capital from other people, when you're taking other people's money, You've got a fiduciary responsibility to them to put their money in a good investment, and you have to do your due diligence on the property, on the neighborhood, on the tenants. So better screening, better questions, right? Really, interview the property management company. I have a list of 30, 40 questions that I ask property management companies. One of the first questions that I ask them now is, do you own any units in this area, in this neighborhood, in this market? Because I don't want to be competing with them, right? They're going to take the best tenants, put them in their properties, and then give me the crappier ones because they own in this market. So that, you got to really dive deep. So asking questions, checking the background, doing all of these, applications, employment checks, criminal background, income verification, all of that. You want to really dive deep into it. And I got to tell you, numbers and facts don't lie. And, don't fall in love with the property, fall in love with the numbers and the information that you're getting.
I love what you said, man. You know, some of these lessons they may seem I don't want to say obvious, but they seem logical. But when you're in the throes and you're trying to hire people, like there is no perfect candidate. And that's what makes this hard is that a lot of times you're looking at things and there's some yellow flags with everyone you're going to interview, but you also have to find the best person. And what you're getting at is, you want to ask the right questions to identify some of those red flags. And in your case, it was asking, hey, do you own other properties in this area? The
Right.
reason being is they are almost competing. It's a conflict of interest because
Sure.
they're going to source the best tenants for their property and give you what's left over. We had a property locally, um, similar issue where there was another investor slash owner who was a heavy hitter within that property management company, and he gets priority. I mean, he is basically an owner, and he has about half of their portfolio is his. So guess what? We were sharing assets. We're sharing, property managers and their maintenance team. Well,
Hmm.
who do you think got priority when something needed to be done? I mean, I
Right.
can't tell you the amount of times I would go to my property and no one's there because they were at his property to the point where I had to meet my team at his
Hmm.
property, to do meetings. And I'm like, this is crazy. So obviously that didn't work. But to your point, we want to make sure that the team is capable of doing the work.
Right.
But then you also have to look out for conflicts of interest because you want folks who are dedicated and committed to executing your business plan. So these are lessons you learn, after going through it multiple times because
Right.
you just got to get better and better and better. So appreciate you sharing that. The last thing you kind of hinted on was the tenant base itself. I know a lot of times people just assume, hey, we're going to fix up this unit, make it nicer. We're going to increase the rent $300, and that's going to allow us to bring in a higher quality tenant. What was your experience?
Just because you're fixing up the property doesn't mean you're going to get a higher quality of tenant. What I said earlier, you have to understand the market. You have to understand the demographics of the people that are in the area. We have a demographer on our team, right? There's I think 400 of them in the entire country, and we have one of 400 demographers on our team, and his job is to identify markets, to identify, are they emerging, are they slowing down, is it a pre-emerging market, and then to identify the actual demographics of people in that market. Are they millennials? Are they, Gen Zs, boomers, whatever the title is, right? Who are they? Is it more family oriented? Is it young professionals? Is it blue collar, white collar, whatever the demographics is of that area, he identifies it. And you need to know what who and what is going on in that neighborhood, because you can go into a unit and you say, "Hey, we're going to put granite countertops and stainless steel appliances and do all this to the interior," but the cost of that versus the return on that investment per unit may not make sense. you know we're going into a property now where all we have to do is put in stainless steel appliances and put in washer dryer hookups in the master closet, and we can raise rents by $150 because we've seen it already proven out in the market. We've checked the comps, We looked at the property. The sellers are already doing some of that work in some of the units. So we have a proven upside. They've proven it on the property. So just because you think you can get something done, or because you want to do something, doesn't mean that the market will come back to you and say, yes, thank you for doing that. Now we're going to bring in higher tenants, right? So you really have to understand the market that you're in, the neighborhood. Is it a C neighborhood? Is it a B neighborhood? Is it an A neighborhood? Right? We love to go into, you know, C, or an A or B neighborhood with a C or B property and renovate it and push it up and add more life to it, because we know that's a strong growth market, right? We have the market cycles that we talk about. My mentor, he wrote a book about it, and I think it's called Emerging Markets or something like that. And he talks about how to identify the different markets and where they are on that cycle. So you want to go into a market that is gentrifying, that is appreciating, that is moving up. So you know that if we renovate, there's people moving in. Where is the migration of people and how much money they bring into that neighborhood? So it's all about doing your homework. It's all about going out there, pounding the pavement, going and talking to other properties in the area, seeing what they're doing, what kind of renovations they're doing to the units, how much are they achieving, what's their vacancy rate, what's their occupancy, do they have a wait list? So you got to put on the detective hat when you're going out there and looking for markets and assets to acquire. It's very important to do that.
What you're talking about goes back to that trust but verify mantra,
Correct.
right? It's great
Mhm.
to have this idea that you're going to go in and update the cabinets, update the appliances, the
Yep.
flooring, the countertops, and you're going to push rents $200. But you got to verify that that's possible, that it's
Exactly.
likely. And you got to do that by looking at comps. You have to understand the market. You have to understand what residents are looking for. You have to look at occupancy and demand in general, and that gets hard. And one of the things I always tell people is, I think a huge mistake I see people make is they invest based off of spreadsheets.
Yeah.
They take some numbers, they grab a rent roll of T12, slap it into a spreadsheet, put
Yep.
some mythical, increased rents in there that maybe they see a comp that was a brand new construction or whatever. And they assume they're going to be able to go and do that. And the thing you and I are getting at is really the business plan. And I think for you, because you've got such a varied background and experience, you know, it's different. But for someone who's newer, you have to put some common sense into this too, right? And the business plan, it matters. Like you have to understand who is your audience. Can they afford this? So many flippers, right? You can over renovate a property. You put in that granite countertops and stainless steel appliances, but you're in a C minus neighborhood. No one's ever going to buy that property for $500,000. You know what I mean?
Right.
Like that person does not want to live in that area. It just,
Mhm.
you're not going to, it doesn't matter how nice the property is. So that's the thing I think a lot of people forget or they miss is that, hey, once you get to a certain price point, can you even attract that resident to this property if the community as a whole isn't undergoing that same kind of renovation? Let's talk more about your overall business now, right? So you've got Multifamily Inc. You work with everyday professionals to invest in your deals as well. Tell us a little bit more about the portfolio and how you approach the business.
Yeah, so I've as I mentioned earlier, it's value add C plus to B minus properties in really strong growth markets, right? So we look first for the market, right? Where what's popping? What's happening in this market? What's the job growth, right? Where, that's kind of the holy grail that I was taught to look at when I was starting out. What's the job growth? How many families are being created or moving into this area, right? um, Job creation, who's moving in. So what we'll do is we'll talk to the Chamber of Commerce, the Economic Development Committee. We'll find out what incentives is the city giving to businesses, to companies to come and move in and bring their headquarters to the area. Who's building where? Amazon is building a fulfillment center down the block. They're spending, $500 million, and then 4,000 employees are moving there. And so, that's what we look at. And then we'll go out and we'll start building relationships with property management companies in the area, and then we'll go out and we'll hit the broker scene. Brokers, people. People always talk about, oh, off market, off market, off market's the best thing, off market's the best thing. Off market is great. However, a lot of times when you get off market deals, the sellers don't have great financials. You got to start piecemealing it all together. They don't really understand what's going on. And you got to do a lot of the legwork to find the sellers. Brokers, that's their job. That's what they're getting paid for. They're going out there, they're building relationships with the sellers. They're going out there creating, putting together the financials, putting together what's going on in the area. Now, of course, I look at pro forma as, another word for pro forma is imaginary, right? This is just made up numbers. This is what a broker does or thinks that that's what's going in. Never underwrite based on pro forma. Always underwrite based on actual numbers. And I like what you said, spreadsheets, they're static. They don't move. They're not alive, right? That life is flowing. So also, just to say that when we put our offering memorandum together and we present returns to our investors, we hit a point in time in the future that we say, this is what it looks like, but we'll give them a layout of different cap rates and different timelines because it's fluid. We may not sell it the end of year 3 or 4 or 5. We may sell it, year 5.5. And it's not going to be a 6 cap. It might be a 6.5 cap, or it might be a 6.7 cap. So we like to give them a chart that shows them the different years and different cap rates to show them that this is a fluid thing, right? We're targeting this one point, but we may hit a little earlier, we may hit a little later, a little higher, a little lower. So when they get this overall view, they can see, well, if we sell it in year 3 at this cap rate, we're still making money. If we have to hold it a little bit longer and sell for a higher cap rate, we're still making money. So it gives them an overall feeling of what they could make. And yes, we target that one area, but don't don't base everything on just your spreadsheet. And what I teach my coaching clients is that there's not one metric that is a go, no go. It's holistic. You got to look at everything. You got to look at the market. You got to look at the property. You got to look at the migration, at the job growth, at what has the seller already done? Why are they selling the property? Right? Are they selling the property and they're saying, well, it's 40, it's 85% occupied. But we've been pushing this and why is it 85% occupied? Right? What's the story behind it? Because you're inheriting all of that when you buy. So when we go out to a new market, that's the first thing we do is we'll build relationships with property management companies that are boots on the ground. They know the market, they know the area. So whenever I come across an asset that I like, I'll ask the property management companies, do you know this area? Do you know this market? Do you know the property? What do you think about it? Our goal is to push rents and to, gentrify and redevelop the property and so forth. Do you think this is possible? And we'd like to get their opinion before we dive into the numbers and dig. And understanding all of that when you talk to your investor base or your network wants to hear that you know everything about that area like the back of your hand. There's nothing that somebody can, I've been in the Sun Belt for the last 16 years. Somebody asks me about something in the Sun Belt at 3 o'clock in the morning. Boom, I could spit it out because I've lived it. I know it. I went full cycle on deals. I understand what's going on in those markets. So that's the confidence and that's the knowledge that you need to convey to your network so that they have confidence in you to invest with you.
Love a lot of what you said. To break that down, first and foremost, when you're looking at a deal, you're starting with the market itself. You're taking a high level look. You're looking at population growth. You're looking at job growth. You want to understand from a local economy standpoint what's going on, what incentives are in place to drive business growth and job growth. You're talking to the chamber. You're talking to local economic development councils. You're really getting a feel for the stability and the upside potential in a market. From there, now you're talking to brokers, you're talking to local property managers, and you're getting a feel for like, hey, is this possible? Yes, the brokers are going to tell you you could do everything in the world. You're going to get that confirmed from the property managers. Hey, is there a lot of demand here? Are more and more people moving here? Are rents growing up here? And as you have that information, now you feel confident to go underwrite. And the difference is, I think a lot of groups will just start underwriting with the deal they got from a broker. without having some of that knowledge in place. And it matters because I see people talk themselves into deals
Hmm.
because the numbers look good
Right.
and they don't know why the numbers look so good, right? And sometimes it's because your assumptions are a little aggressive. And maybe that works in other markets or other areas or other parts of the city, but maybe in that particular submarket is just a different dynamic. And with commercial multifamily in particular, you're dealing with sharks. I mean, it's sharks. So they're savvy. Some play fairly nicely, but they're not going to save you if you make a mistake. So
Right.
it's really important to understand the bigger picture of the market and that property and then figure out your business plan, because if you have that's probably 50 to 70% of it. But if you miss on the market, you have the wrong business plan for the wrong property in the wrong market, you're just screwed, and it's just there's not
Hmm.
much you can do, and no one's going to save you, and your best bet is to cut your losses and move on and take the lesson. Talk to me about kind of what you have seen here over the last, let's call it 3 years. You mentioned that you've invested in the Sun Belt. You live out in Florida, so you obviously seen some changes in the marketplace. How are you approaching the market today?
That's a great question. Today is very, I mean, we just came out of a cycle of high interest rates, of sellers thinking that it's still 2021, 2022, prices are high, you know. So for the last, 2 years, we've been underwriting, we've been looking, but we're very conservative in our underwriting, right? We're not aggressive. We uh, and because you see what's coming down the pipeline, right? A lot of people bought properties at a three cap thinking that this was going to last forever. And now that three cap is a six cap, which means that all their equity is wiped out. Now they got to sell for the debt. And even the debt on the property, it doesn't make sense. It doesn't cut it. So, we see a lot of people in trouble today. So for the last 2 years, we were underwriting. We put offers. A lot of brokers said it's not going to fly. It's not going to fly. We didn't acquire anything, and that's okay. Sometimes you gotta put the brakes on, and you gotta say, hey, you know what? We're going to sit on the not sit on the sidelines, but we're going to wait until the our asset comes along, right? And I tell this a lot to my coaching clients is sometimes you'll be underwriting for 6 months, a year, and not get a property, and you'll get frustrated because you want to close on a deal, and then you'll say, you know what, it's okay, we'll make it work, like what you said, we'll make the numbers work, we'll fidget it around, we'll do it, and that's when you get into trouble. Now that interest rates have come down, there's a lot more movement in the market. Uh, it's you really have to have knowledge of the market, of the industry. You got to be an expert in it, right? We don't have a crystal ball to look into the future and say what's going on, but we you have to take a mitigated risk. And how do you take a mitigated risk? By doing your due diligence, by checking the markets, by checking the people, by checking the movement, the demographics, what's going on in the area, from your immediate MSA to the other MSAs that are surrounding you. What's going on over here? And listen to the experts, listen to the people who, the billionaires, the 100 millionaires of these, you know, big ass companies, and where are they moving? What are they doing? Right? Are they moving out of an area because now they're going to be taxed really, really high and they're moving to another area? Where are they moving to? Right? How many people are they bringing? So listen to these people, watch what they do, right? Because it's like I always tell my my clients that you could go out and spend $1 million and do your marketing research, or you can follow the big boys, the big girls, right? The Home Depots, the Lowe's, the Starbucks, right? The Targets, the Walmarts. They do all that research. So go to where they're going. Where are they opening up? Why are they opening up in that area? Well, maybe they know something that we don't, right? So the market today, interest rates are dropping. I think they're the lowest they've been in 3 years. Um, it's time to start getting educated, learn, get your feet in there, start building your team, start educating your network about why you're going into certain markets, what's happening there, why multifamily. and start educating everyone so that when you do have a property, when your LOI gets accepted, you're not doing that. You're moving the property forward and your LOI forward. I always hear people say, "Yeah, you know what? When you find the property, the money will be there." But that's only half of the sentence. When you find a great deal, the money will be there if you've built the relationships, right? If you haven't built the relationships first, it doesn't matter how awesome of a deal is. No one's going to come talk to you. I love the show Shark Tank. What are the sharks always? What's the one thing they look at before a product? They'll look at a product like, yeah, the numbers are great, blah blah blah. Okay, now, John, tell us about you. How did you come up with this idea? What's your background? Where are you? What, right? Because it's about the person behind the deal. It's about the person behind the product, right? So you have to become the person that people want to invest with. And how do you do that? By educating yourself, by becoming an expert, by doing your due diligence, by showing that, yes, I am the expert and I know what I'm talking about.
Nitzan, love what you hit on, man. It's so important because I know for a lot of people, the last few years have been a challenge because there's basically been two camps, right? The camps where they've gone out and they figured out ways to keep the deals flowing. And I'm
Hmm.
not knocking that. That's, if you can adjust your numbers and figure out different returns or capital stack, great. And there's groups who have been patiently waiting, wanting to do deals, not sitting on the sideline with dry powder, but just like wanting to do deals,
Right.
just didn't get deals that penciled that made sense. And I think for that group, they recognize the value that's here and coming, right? Because now those deals are starting to pencil a little bit more. Those sellers are starting to become more realistic about the market
Hmm.
expectations. Brokers are doing the same. So it's a great time. The challenge is that when the money was flowing from investors, the deals were a little bit, harder to come by.
Right.
And now that deals are starting to open up and starting to make more sense, money is starting to get a little tighter, a little harder to come by. And one of the things you gave as far as advice is make sure you're talking to your people, educate yourself, share what you're working on. You have to build the relationship. And that point, that quote, I hate that quote, by the way, where people say, when you have a great deal, the money will show. It's crap.
Right.
And the reason is it's not magic. Money just doesn't show up. It's what you said. You've got to build relationships. You've got to demonstrate a level of expertise. It takes confidence, credibility, and connections to raise capital for deals, period.
100%.
It's not luck. It's not cool. You found 123 Main Street, come invest with me.
Right.
Because if people don't know that you know for sure that it's a great deal, then they're not going to trust you.
Hmm.
And how do you know it's a good deal, right? There's so many deals that have been done over the years that have turned out to not be really good deals, right?
Right.
And that's where the fallacy in that statement lies because you have to be able to understand how to navigate this landscape. And if you haven't built those relationships and you find what you think is a good deal and you just think people are magically going to come to it, you're going to be up for rude awakening. And I know folks who are really great at what they do have had an excellent track record raising capital who are absolutely struggling raising capital in this environment for that exact reason.
Yep. Absolutely. Absolutely.
Yeah.
It's all about building those relationships. And a lot of people they'll put a property under contract and then they'll go talk to people. It's like you don't understand that's not the way to do it, right? There's going, capital raising happens in between projects when you don't have a property under contract. That's the building of the relationships. That's going out and networking and talking to people and building the trust and building the commonality and having that rapport. Because when you want to scale your company, when you want to scale your business, you're going to go out and go to different events. You're going to meet family offices. You're going to meet ultra high net worth individuals, and you know you're looking at them. I know I was looking at them and going, why do they need me? They've got $100 million. They've got $1 billion. What? Who am I? But that's not the thought process. The thought process is let me go out there and build a relationship with them, and then I'll figure out what value I can offer them. I'll give you an example. I was at a conference and I bumped into a family office that I'd met several years ago, and we kept talking and here and there. We hadn't talked in a while, and then we met up again, And I said, so what are you guys looking for? He goes, we're looking for operators who are hands-on operators. We're not the day-to-day operators. We're looking to partner with people. I said, well, that's perfect. That's who I am. I'm a hands-on operator. I go to my properties, I check on them, I do surprise visits. During COVID, I drove to my properties because we couldn't fly for a while. I drove to my properties. I was picking up the garbage. I was hanging the drywall. I was painting, helping the maintenance, helping the property, collecting rent, because that's what we do. We're the hands-on operators. And the guy's like, well, that's perfect. We definitely need to talk. But the point is that even though they have all this money and all these family offices and REITs and groups and equity, they are not the ones that are going to operate the properties. So while they have a lot of money, you have what they need. But if you don't build that relationship, if you don't build that commonality, if they don't know you and see you often going to these events and talking to them and see you on social media. My investors tell me, Nitzan, we love what you do. We always see you on social media at your properties, picking things up, doing things. We love that about you. Awesome. Well, that's the whole point. I want you to know what we do, that we're not just the people that will close on a property, let the property management company run it, and then go off and do another one to get our acquisition fee. That's not what we do. We go out there and we will make sure that the property is functioning, because when the property succeeds, we all succeed. The property sinks, we all fail.
I love it.
So
Great.
go out and build those relationships with people and then figure out what value you can bring to them.
Great insights right there. Nitzan's really active on social media as well. But check out his website, multifamilyinc.com. We'll put a link to that in the show notes. Right now, we're going to transition and go to our round of insights. When you think you found a great deal, asking the right questions could be the difference in finding a stud or a dud. Listen, we've put together a new guide to help you out. It's called 7 Questions You Must Ask Before Investing in Apartments. Now, in this guide, you're going to learn how to uncover red flags, quickly identify underwriting risk, vet sponsors and team members, and confirm key assumptions. Now, this is a guide that's going to help you be a better investor, whether you're an active investor or you're a passive investor looking to partner with other operators. Asking better questions is the key to identifying great opportunities. So download this free guide. Go to our website, casmoncapital.com/7questions. That's the number 7 questions. And you can access this free guide today. To make it easy on you, though, we've put a link in our show notes. So you go to the show notes, you can click that link and access the guide right now. This guide's going to help you make better investment choices, asking the right questions to build your portfolio. So be sure to download it today. Give me a failure or an apparent failure that set you up for later success.
Oh, the duplex and the and the fourplex. That was a failure that thank God I bought them right. At least I made a little bit of money, if not broke even. I think I broke even on the duplex, but I made money on the fourplex because I bought it right. But the failure there was not knowing what I didn't know, not knowing how to vet my tenants and my property management company, and not vetting, the neighborhood and who was going to be my tenants. And that set me up for success later on, knowing that, hey, I better check on them, right? I better make sure that I know who is in my units. I know the market, know my property management company. So that definitely set me up for success later on.
Give me a digital or mobile resource you recommend for our listeners.
Digital. So there's a software called Opus Clip that I use for my social media. I'll do a video. I'll throw it into Opus Clip. It'll give me the captions already built in. It'll give me the text. I'll take the text of what I was saying and I'll throw that into ChatGPT, and I already named some of my chats. So I have one that's called Social. And I've already told Social that every time I say, hey, Social, it already knows what to do. Take my text, make sure that it sounds like me, make it the platform for Facebook, TikTok, blah, blah, make it all ready. Give me some emojis, make it sound like me, do all this. So then I'll take the text, I'll throw it in there. It'll make it look nice, fix it up a little bit. Then I'll take it, I'll download the Opus Clip, and I'll go into Go High Level, which I use as well. And then I automate all of my social media platforms. I do it once, boom, 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 schedule my post, and I'm done. It's automation, it's ease, and it's simple. So Opus Clip, Chat, and Go High Level, those three that I really use. And Audible. I don't know if you guys know Audible, the book, listening to books. I'm always listening to books.
Well, speaking of books,
I'll go out and buy the book, and then as I'm listening, I'll read it, and then I'll read it again, just to have both the visual and the audio.
I love it. Speaking of books, give us the book you've recommended or gifted the most in the last year.
It's 2 books by a gentleman named Oren Klaff, OrenKlaff. Pitch Anything and Flip the Script. Right here. Let me see if I can show it.
Yep.
Let's see.
There it is.
Flip the Script by Oren Klaff. And he's got another one, Pitch Anything. Great books. Really dives deep into, because we do webinars to present our properties, how to create an elevator pitch, right? He structures it. This is a guy who's raised hundreds of millions, if not over billions of dollars of capital, from Swiss companies and all over the world for different types of projects. So he's really taken it and dialed in how to present, how to put webinars together, how to present in front of people, what they're looking for, what they're thinking of, and all that. I mean, fantastic. I recommend this to all my coaching clients.
Give us a daily habit that helps you stay focused on your goals.
A daily habit. So the night before, when I'm done at my desk, I'll write down a list of everything that I accomplished today, and then what I didn't accomplish and what I have to accomplish tomorrow. And I'll go through it and I'll set it, and then I'll look at my calendar right before I go to bed. What do I have to do tomorrow? And that sets me up for the next day. I don't have to think. I don't have to wake up and go, okay, shoot, what do I need to do today? Damn, I forgot something. I got this. It's in my calendar. It's in there. It's all written down, and it's the first thing I see when I go to my desk. Before I go to my desk, I'll sit in silent contemplation. I'll just sit quietly for like 5-10 minutes, focusing on my breath. On the tip of my nose, on the breath that goes in and out. Silence is the best place to be. And if your mind wanders and whatnot, that's okay. Let it wander. Look at all the thoughts. Ask yourself, where do these thoughts come from? I'm not the one thinking these thoughts. So where does it come from, and who's thinking these thoughts, and why do I have these thoughts? Can I change these thoughts? And, it's all about asking the questions. And as you start asking the questions, you start realizing certain things, and that also helps you focus and get a clear start to the day.
Love it. Good stuff. All right. Give us your number one insight for scaling a multifamily portfolio.
Scaling is using other people's money, time, skill sets, and success. It's other people. One of my partners says that, she has a great saying, being successful in multifamily is like running 12 marathons at the same time. And you got to cross the finish line on all 12 to be successful. So, while I'm good at networking, at talking to people, at spotting new markets, at certain things, I'm not good at other things. So I built a team of people around me that are good on social media, that are good at underwriting, that are good at asset management, right? So that I can focus on what I call zone of genius, and they focus on their zones of genius. And then together we become the Avengers, right? Everybody has their own superpower, and when we combine together, we're unstoppable. So if you want to scale your business, you got to use other people's money. You got to go out there and raise capital. You got to use other people's skill sets, other people's track record. So a lot of times people say, well, what do I say when a broker asks me what was the last deal I've done, or if I'm highest and best, what do I do? I say, well, you got to partner with people who have success, who have done what you want to do. And then when you're talking to brokers, to your network, to other people, you can say, you know what, I'm just starting in the business right now. However, I'm teaming up with X, Y, and Z, and they're the experts. And I equate it to a rookie coming onto a NFL, NBA team, right? And they're new. But what happens if that team now goes and wins the Super Bowl? Guess what? They still get the ring. right? What happens if the NBA team goes and gets the NBA championship? Guess what? The rookie who didn't play a second on the team still gets a ring because they're part of the team, right? So they're feeding off the success of their the players that have done everything, but now they're saying, well, yeah, I was part of that team. That's why I get a ring. So find someone who's successful, right? Bring value to them. And do me a favor, for those of you that are listening right now, don't come to people like John or myself or other players and go, hey, how can I add value to you? And the question the way I answer that is, I have no idea. I have no idea how you can add value to me. I don't know you. I don't know what you're good at. So before you do that, find out what this person, what this team, the sponsor, what are they doing? Find out what your zone of genius is. And then you go, hey, John, listen, I know you're in the multifamily space. This is what I can do. And if you have space for someone like me, I would love to add my skill sets to your team. Now, John is going, okay, well, let me think. Maybe I could use you on, maybe there is a spot. But if you just come and say, hey, how can I add value? I have no idea.
Yeah,
That's how you can scale your business.
I love that. Last question here, then I go follow up. You're in Florida, so give us your favorite place to grab a bite to eat.
So there's a great falafel place called Boca Grill. They're from Israel. They make a great falafel. The hummus and the tahini sauce and the salads. It's all fresh, and I mean they give you a monster pita with the falafel in it. So it's phenomenal. It's great.
Sounds delicious. So I wanted to follow up on two things. One, you mentioned finding everyone's zone of genius. I know you've got a tool that may be able to help our listeners. Can you talk a little bit more about that?
Absolutely. So I reached out, and I've got a couple of psychiatrists, psychologists, and mental people that know the brain and know how to use that and whatnot. And they came up with an assessment. I think it's 55 questions to assess what is your zone of genius. And it takes 10 minutes. It's multiple choice questions, and you fill in your information, your email, and whatnot, and within a couple of minutes, you get that response. You get that email that tells you where you should look to focus your energy on. Are you a capital raiser? Are you an underwriter? Are you investor relations? Are you asset management? Because all of these zones of genius require a different head, a different mentality, a different way of thinking, a different way of doing things, skill sets, personalities, and so forth, right? For example, an introvert should not be a capital raiser. You're an introvert. Capital raising means you got to go out and you got to talk to people. You got to like people. You got to have that personality to talk to people. On the flip side, you don't want your underwriter going out and partying until 4 o'clock in the morning, 3 days a week, right? Because then they're all groggy and they'll make mistakes underwriting and they won't do what they do. So it's a 55 question assessment that was put together by professionals to help you assess your zone of genius. And if you go to my website, which is right here, multifamilyinc.com, there's a link, you click on it, it'll ask for your email, so it can send you the report, and then just fill it out, and now you can understand what it is your zone of genius. And then I also have a free school community. It's called Multifamily Moneymakers. Please come join. It's a huge community. I have over 100 people in that community. We talk about multifamily, real estate questions, all that stuff.
Love it. Great stuff, man. We'll definitely link to that in the show notes there. Nitzan, just enjoyed our conversation. A couple things jump out to me. One, just the mentality of learning, trying different things in business and investing, wholesaling, flipping, ultimately getting into multifamily, and just realizing that, what, we got to be able to scale. We have to scale with other people, other people's time, other people's money, other resources. And that's what we're going to learn. And then breaking down your approach to the market, to finding deals, to validating your business plan before you even think of taking it to investors. I think it's just really, really insightful for our listeners. Again, if you want to learn more, check out his website, multifamilyinc.com. Nitzan, it's great talking to you today and having you on the show. I look forward to staying in touch with you and hope you have a great day.